Well, if your money is in the stock market, protecting yourself against volatility is likely a top priority of yours. Now, there is a new tool in the box, so to speak, from Safe Harbor Wealth Advisors to do just that. President Cory Sickles back to explain for us. Good to have you, Cory.
Nice to be here, Robin.
All right, so you're here to tell us this is a new investment portfolio that Safe Harbor Investment Advisors will be offering. Tell us more kind of about it and what it'll help, I guess, for your clients.
Yeah, I think this is actually probably the first time I've actually talked about a particular product.
Yeah.
We have a new product that's going to launch in October, and our business partner, which is Gradient Investments, we're offering and it's going to be called the Buffer Index portfolio.
Okay.
And it's pretty simple. We're using structured notes, and we're going to be able to allow clients to invest in the market and still have the upside potential, but they're also going to have what we call a buffer, so it's going to limit some of your downside risk.
Okay, so let's get into it a little bit more for those of us, kind of the layman's terms of things. You mentioned this term, structured note. I think of like taking really good notes while you're reading a paper or something, but what is this? How does it benefit someone investing?
Well, it's usually it's an agreement. So one of the things that we do is we go out and we get a financial institution, and they're going to be the backing of this. And one of the things they're going to be able to do is they're going to say, okay, this index, the S&P 500, they're going to allow you to participate. That also means that you could lose money if the market does go down because you are investing in the market.
Right.
Right.
Okay. There's
going to be a buffer, which means you're going to have you're going to be able to lose only above a certain loss point.
Okay.
And again, like I said, it's the S&P 500, and it's going to also be out there for a particular point of time, for example, 1 year. So the one thing I do want to make sure of is this is not an annuity. You're actually investing in the market with like the S&P 500 index.
So how this product really works essentially is kind of, I guess, limiting your risk. Is that how you would say it? So you feel a little safer?
It's exactly right.
Okay.
Yep. And I know we're probably going to have something on the screen here in a second.
Yeah, this buffered index and kind of what it is, right?
That's exactly right. And if you look at my example here, on the left-hand side, it talks about the cap. And the cap's saying the most that you can make is 12%. Then there's also a buffer of 10%. So the buffer means I only lose if it's above 10%. So if you look at the example down here on the left-hand side, you can see if the market drops 20%, you actually only lose 10. The market drops 5%, you don't lose anything. If the market goes up 5%, you make 5%. And in the elastic side over there, if the market goes up 20, you make 12 because your cap is capped off at 12%.
Okay.
So the nice part about it is for a lot of our clients that are retired or thinking about retirement, or even our viewers out there today, they want to invest in the market. And there's a lot of talk, about volatility in the market right now, and I think it's going to be scaring some of the investors off. This is a good way to still be invested in the market and have some protection on the downside.
I was going to say, and is this good for somebody who is just starting out in the investing world, the people who are coming to you and saying, I don't have any money anywhere, I want somewhere to put it? Or is this better for somebody who has had money in the market and they can switch over to this product?
I think what it is in both situations, it's all it really depends on your risk level, right? But more importantly, this is going to allow you to still invest in, maybe you don't put all your money into something like this, you put a portion of it in there to be able to still, because if the market does go up 20, a portion of it could go up 20%. But this is a way to protect it. And of course, if you're retired, this is a good way to be able to get a decent return by limiting your risk.
Okay, and you do often talk about, obviously, that you guys deal with so many people in their retirement years or getting ready to retire. You also offer complimentary meetings. Is that the best way if someone wants to kind of hear more about this, see what it can do for them?
Yeah, you can definitely give us a call, at 614-760-0670. Give me a call. We can sit down for this particular product to actually see if it, meets your needs.
Okay.
There is a October 1st. That's going to be our first time that we actually put money into this portfolio. So just give us a call and we can have it's complimentary and no obligations.
All right. You have two offices as well, right, Cory?
I do have one over in Dublin and one on Easton.
All right. So should be somewhere near you. Give them a call, set things up. Cory, thanks for sharing that with us today.
Thank you.